Hello people and welcome. This video describes how online platforms have changed the way in which house owners, house buyers and tenants connect with each other in the housing market. We describe the history of the housing market, the current situation of the housing market and the expectations for the future. For illustration, we take the Netherlands as an example in this video, but similar trends could be seen in other countries. Currently, it almost seems unimaginable to find a place to live without using the internet. However, before the arrival of the internet, there was no other option. To show how the housing market in the Netherlands has changed, let's go back in time to the 13th century. The first brokers arose in 1284, when Earl Floris V allowed this craft by law in Dordrecht. These brokers were the connecting party between trading partners and brought people together who wanted to trade ships, textiles, furniture, food items, and, of course, real estate. For hundreds of years, little has changed for these brokers. They earned money from the commissions they received for every house sold, either set by a fixed price or alternatively a percentage of the selling price. Renting a house was a different story. Home owners initially connected with tenants via old school methods, like placing a note on a pin-up board in public spaces, or information was shared with networks of people. This required a large amount of time and effort from both the landlord and the tenant. In the 19th century, this changed because of the emergence of housing corporations that were often regulated and financed by the government. These corporations built and maintained houses, while renting them out for a relatively low price for citizens with a low income. This phenomenon was called social housing. Private homeowners struggled to find tenants because of the emergence of these large corporations. Therefore, they started using intervention of a broker who had often specialized in the renting market. Here, the brokers too received a fee for every contract signed. Decades later, the invention of the internet completely changed the way in which homeowners and tenants communicate, because of the rise of two-sided online brokerage platforms that connect these two parties. The emergence of these platforms weakened the role of offline brokers, which has several benefits. For online brokerage platforms, the physical infrastructure and assets that offline brokers use is no longer needed. Building and scaling networks became cheaper. Homeowners have access to a larger customer base. Tenants have access to a larger number of houses, and it is easier for them to compare due to more transparency, for example. They can easily get access to media of various houses or rooms, including pictures, videos, and specifications of the property. Transaction costs decrease, since a large part of physical communication is replaced by online communication. These benefits eventually led to a decrease in effort and time needed for the rental process. However, for the process of buying or selling a house, offline brokers still coexisted, along with online platforms. In many cases, brokers combined online and offline presence. The reason is that a house is an expensive purchase, which has a large impact on people's lives. Therefore, many people are willing to invest more money and time on house selection. Although still the biggest part of the trade in real estate is done with offline brokers, more and more people are nowadays selling or buying without the intervention of an offline broker through platforms like Jaap.nl. In order to thoroughly understand the platforms that currently exist, let's zoom in a bit more on their properties. First of all, they have a triangular structure, composed of four parties. The demand-side users, such as tenants or buyers, the supply-side users, such as homeowners, platform providers, the online platforms and communities, and platform sponsors, technology providers. Second, the platforms exhibit strong cross-site network effects. A large number of houses offered on a website attracts more tenants to the platform, while in turn a large number of possible tenants on the platform encourages homeowners to offer their house. Third, many platforms subsidize either the demand or supply side of the platform and charge money to the other side. They do this to attract users in order to increase network effects. The reason why the same part of the platform is not charged consistently is that different platforms target different niches with different willingness to pay. Demand for rental houses differs strongly per region. Some regions of the Netherlands experience a decrease in inhabitants due to large numbers of citizens moving to larger cities. In these areas, homeowners experience difficulty in finding tenants, and they are charged a premium by platforms for offering their houses online, while tenants are subsidized. However, in other regions, such as student cities, it is difficult for people to find a rental house. In platforms that target these areas, tenants looking for a place to rent are charged a monthly fee to gain access, while homeowners are subsidized. Fourth, Interoperability is common among housing platforms, since many platforms redirect demand-side users to related platforms, such as Nestpick and Housing Anywhere. Fifth, there are many platforms targeting niches, who have needs for different features. An example is Housing Anywhere, which primarily targets students from all over the world, with the main page of the website featuring the question, "Where will you stay next semester?" Sixth, homing costs. These are the costs for users to adopt a platform. They are low. Subscription fees are reasonably priced and currently reducing because of expansion of social media. Since niches exist and homing costs are low, we expect the number of housing platforms to keep increasing. At the same time, population growth, internationalization, and increasing transparency may lead to an increase in housing rental as opposed to buying property. A slight increase can already be observed, and it is expected to increase even more, at least up to 2025. Due to the increase in demand and decrease in supply, we can see that the rental price consistently increased over the past few years. The increasing competition among platforms is expected to drive margins down. However, at the same time, the increasing demand and decreasing supply for housing rental will raise margins. These two effects will eventually cancel each other out. Another factor that might impact the housing market is the smart home revolution. Smart home devices, including Internet of Things and contactless key entry, are expected to be widely implemented. These devices will increase efficiency for both landlords and tenants. This will make property management easier, since it enables landlords to rent out property without even having to meet the tenant, and provides landlords the opportunity to track more information, such as rental payments, maintenance reports, and so on. A third expectation is the increasing use of data analytics to provide a better connection. Companies like Housing Anywhere currently already use intelligence platforms, such as StatsBot, which offers a solution for data analysis. Starting with just a couple of reports, Housing Anywhere now tracks 32 different metrics from Google Analytics and Mixpanel, for a team of more than 100 people. In the future, more companies are expected to apply big data analytics. A fourth expectation is convergence of the house rental and buying industries. Although many people who are looking for a house might still hesitate these days to do this online, people might get more comfortable with online approaches. Therefore, transaction costs in the housing selling industry are expected to decrease significantly, coming closer to the ones in the housing rental industry. Fifth and final, companies from adjacent markets may envelop incumbents. Airbnb currently emphasizes the tourism industry rather than long-term rental. However, a switch to long-term rental can be expected when demands for long-term rental increase over time.